So in today's video, we're going to be getting into some technical analysis. We're going to be talking about day trading, bear flags. Flag patterns are my favorite technical pattern to trade. I also do trade upside opening range breaks and downside opening range breaks, but in the current environment, the flag patterns seem to be working really well. And I have 3 great examples to show that on Monday, May 9th, on Tesla, Nvidia, and AMD. And here's a general picture of what bull flags and bear flags look like. And when it comes to the stock market, nothing is going to be perfect. This is just the concept of it, where when it comes to bull flags, there's a big move to the upside, some sort of consolidation, and then continuation, and vice versa. Bear flags, big move to the downside, some sort of consolidation, and then continuation to the downside. And I do get a lot of questions about people asking, how do you know which one's going to work out versus which ones aren't, the ones that fake out versus don't? I don't know. It's all about probabilities and chances. I never know which one is going to be the one that works, but I do know that there is a high probability chance. So if I take that trade 100 times, I'm usually going to win more than I lose. So I never know what's going to happen, but I just take the shot. And then obviously what I talk about in my videos, I want it to go in my favor relatively quickly, or I need to just get out of the way. And now I'm going to go over the examples on Tesla, Nvidia, and AMD. And my approach when it comes to patterns is I want to see them go pretty quickly in my favor, or I need to get out. My hold time is anywhere from 1 to 3 minutes. On the other side, if I'm holding something and it's going against me, that max hold time, I usually want to be around 5 minutes, because if I'm holding longer than that, it's usually because I'm upside down in a trade. So my approach, which is not the best approach for everybody, is more time-based. I want it to start to go in my favor pretty quickly, or I just need to get out of the trade. I can always get out, and then if it sets up again, I can reevaluate it and take it again. But there are a few other ways to manage risk when it comes to trading these patterns, just based on what a lot of other people talk about, and I'm going to go over those in this video. So now let's get into the first example, which is going to be the Tesla bear flag. Now the most important thing is focusing on the daily first. What is the daily doing? So as you can see, Tesla's been pretty weak recently. So realizing that if that weakness continues and a bear flag forms, that's probably going to be a high probability setup, just because you're going with the flow of the market. So now that we look at the daily chart first and we come up with an idea of what it's doing, which it's been weak, now we're looking for that pattern to happen. Now it doesn't mean it's going to happen, but just want to wait and see if it does. Tesla had a pretty big gap down today and it was a little choppy. I'm noticing that on big gap down days, you got to practice patience. I've noticed that when I back off the open and I really let things kind of chop around, have a few fake outs, and then wait for clear direction, that's usually when the setups work the best. And that's exactly what happened. So I had to move lower and then very quickly took out the high, pulled back a little bit, made a new high. This is very choppy. This is not easy trading in my opinion, and I don't see a clear pattern. And then finally, it gets back below VWAP and the 9 EMA. Those are the 2 indicators that I really like to use just for short-term direction. And then what happens? It takes out the low, starts to consolidate towards the lows, realizing that the daily chart is weak. If anybody is long from 840 and above, you got to think about the pain trade. They're going to be on the wrong side. So as Tesla continues to move lower, that selling pressure could get aggressive. So not only is it considering what's happening on the daily chart, what's happening on the intraday, where could people possibly be stuck, and where is that pain trade? And then it eventually takes out the lows, consolidates below the VWAP and the 9 EMA, forming the flag pattern. So big move lower from the highs, and then nice tight consolidation. And then when it makes a new low and breaks this flag right here, has very nice follow through to the downside. And also something that's very important is I made sure to add it on the chart is I focus on 4 technical levels every single day: pre-market high, pre-market low, prior day high, and prior day low. I want to see those flag patterns form right around those levels. And the reason why this flag happened to be really good and it worked out well, I believe, is because it formed just above pre-market low. So now you have that consolidation after people may have been stuck towards the highs, below the 9 EMA, below the VWAP. The flag is forming just above pre-market low, so you have a technical level below. So if that technical pattern confirms and it breaks that pre-market low, you have numerous things lining up and a high probability setup. Now, nothing is 100%, but just based on my experience, I've noticed that these trades tend to work more than they don't. So now let's get into the Nvidia example. So looking at the daily chart, it's been weak. So if a bear flag forms, the likelihood of follow through to the downside is high, just because you're going with the flow of the market. And this is going to be a good example because this shows a bear flag forming just below pre-market low. So in a perfect world, I would like that bear flag to form just above it, so that way I can take the break of it and then I have that level below. But sometimes they set up around those levels versus being perfect. This is a really good example of that. So what does Nvidia do off the open? Pulls back a little bit, right over the highs, and then comes back towards the lows. This is very choppy. I don't see anything clean. and then gets back below the VWAP and the 9 EMA, breaks the low a day, and then here is the consolidation. So a nice move from the lows, and then it consolidates just under pre-market low, forms the flag pattern, and then when it starts to get weak and breaks those lows, has really nice follow through. So even though in a perfect world, I want that bear flag to form just above pre-market low, if it looks good, if it breaks pre-market low and that bear flag still looks good, the reason why I'll take it is because I think that that was a momentum level that broke. And even though it's forming below it, if it looks good, I think there's still going to be follow through to the downside. And I manage risk by wanting it to go in my favor quickly or just get out. So I want to see it break the low, continue to follow through. If it starts to bounce against me, I'm going to get out of it. But another way to do it is maybe risk off that prior pivot high. Here's the thing. Sometimes it's pretty far away. I don't like doing that just because I know that if I take the loss, it'll be pretty big. I really want it to go quick in my favor, but I know that I've seen some other people do it and it works well. So kind of risking off that prior pivot high, or maybe risking off a prior candle high. So it's a little bit lower, not as far away, but the whole way to figure out what works for you is trial and error. So a few different ways on how to manage risk. Number one, the way that I do it, I want it to go quick or just get out. Give it a couple minutes. If it starts to go against me, get out of the trade. I can always reevaluate the setup. Number two is risking off like a prior candle high. So that way you know exactly where to get out, but it's not too far away. And then if you want to trade a little bit smaller or you're okay with more risk, maybe a prior pivot high. So that way you have a clear out, because if it gets above that pivot, it did not do what it was supposed to do. And then you avoid taking a big loss. And now let's get into the AMD example. So always going with the daily first. Yes, it showed some strength recently, but still overall it is weak, and the market overall is weak, which is very important. It's not only about what the individual stock is doing, but what is the overall market doing? Everything has been weak recently, so just trying to go with the flow of that. And what happened off the open? So pulled back a little bit. It did break that pre-market low really quick, but it did not form a pattern in my opinion. And then it went over the highs and then very quickly got back to the low. So if anybody tried to take the high day break, they're possibly on the wrong side of the trade. So factoring in the pain trade. And then eventually it feels like it chooses a direction. It gets back below the VWAP and the 9 EMA, makes a new low a day. And then look at this tight consolidation below the 9 EMA. That's a nice looking bear flag. And then when it starts to get weak right here and breaks the lows, has really nice follow through. So the general idea of a bear flag is a move lower and then a tight sideways consolidation. Buyers are not able to take back control below the 9 EMA. And then when it breaks the lows, usually gets more follow through to the downside. And then my way of trading it is I want to anticipate that new low just a little bit. I want to see it go in my favor very quickly. If it starts to bounce against me, I'm going to get out. Some other ways of doing it, risking off that prior candle high or even the prior pivot high, because if it gets above this area, it could get back above VWAP and really start to squeeze, and you don't want to be in that move. So those are some great examples of bear flags on Tesla, Nvidia, AMD, and kind of how to go about trading it just based on what works best for yourself. The way to figure anything out is just a ton of trial and error. Like anything else, it just takes a lot of time and effort to really figure out what works best for you. But I've noticed in the current market environment, bull flags and bear flags are great patterns to trade. And remember that nothing works 100% of the time, so that's why risk management is very important. Hopefully you got some value out of the video. Feel free to like and subscribe, and I'll see you in the next one. Thanks for sticking around to the end of the video. I just want to talk about a couple cool things that I have to offer. The first is going to be my newsletter watch list. This is exactly what I post on my private Twitter 30 minutes before market open every single day. I do a quick analysis of the overall market, the SPY and the Qs, if there's any major market news that day, and then all the stocks I'm interested in watching. It's usually 4 or 5, if there's any major news tied to them, and all the levels that I think are in play. To the left, this is exactly what I'm posting on my private Twitter. I make sure to add that newsletter. I take a screenshot of the charts, green line to the upside being long, red line to the downside being short, and I make sure to highlight those 2 levels above. This is everything that's going on in my mind and my game plan going into each market open. Also, I make sure to add a little mental note because every day is slightly different, and here's an example of that. And if you want something that's a little bit less of a commitment, I do offer a live one-on-one call for 1 hour. This is where you can ask me questions about my journey, go over setups specifically, everything that I've gone through as a trader. Whether you're beginner or advanced, this is a great way to connect with me. So if you're interested in my private Twitter or the one-on-one live call, feel free to go to callmattdiamond.com or check out the links in the description below.